Hey there everyone. I thought that today would be a great day for me to go over range trades because this morning we were in such a sideways range and it was really picture perfect for taking range trades. So a lot of you aren't familiar with those. It's just something to do while price is going sideways and things are quiet, and something to do while you're waiting for something better to come along. So if you would like more info on this setup or any of the setups that we trade in the room each day, you can get info on the ebook at www.easyemintrade.com. And if you have any questions, feel free to shoot me an email. So I'm going to show you this on the NQ. You can trade it on anything. The key is to make sure that you are going sideways with the area of support repeatedly being hit and the area of resistance repeatedly being hit. With this particular setup, you want to make sure that you are doing it when things are quiet. You don't want to do them first thing in the morning. You don't want to do them at the end of the day where we have a lot of volume coming in and you run the risk of price deciding to break out or break down. So this morning you can see here that we're really sideways and we're continually hitting the area of support here with the area of our close and our pivot point holding. The area of resistance here, we had an area that we've been watching for a while at 91. It didn't quite hit that this morning, but you can see the area that repeatedly had been getting hit here at the 89 change area. And I have a blue line there so you can easily see it. So you can see support, resistance, support, general area of resistance, support, resistance, support. So you can see those same areas being hit over and over again. I like to use a stochastic to time my range trades, and I use a slow stochastic, and this is in the ebook, so if you need to refresh your memory, just open up the ebook and go to the range trades. So you can see here, as mentioned, we have support up to resistance, then back down to support again. So what we look for when the areas are repeatedly being hit is I look for the area to hold for a few bars, and then I watch for the stochastic to cross above 20 if I'm at support. And then what I do is once it gets above 20, I put a buy stop above the bar that is giving me the stochastic above 20. And then I look for the entry to trigger, and then I just use a specific target. I don't usually wait for it to get back up to the resistance area. I'll usually still just shoot for a 2-point first target. And definitely make sure that your range is large enough to trade. If it's a very small range, it's very difficult to use the stochastic to time the trade, because by the time the stochastic rolls above 20 or below 80, you're often back down to support or resistance or up to resistance already. So important that you have a large enough range to trade. So this area here didn't quite hit that area mentioned, and I'm not a fan of one touches, meaning it comes up and one touches and then you're trying to take a range trade. I like to see it hit and hold for a few bars. Even I don't mind it breaking out or trying to break out a bar or two and failing and then coming back under or above the support area. So also what's helpful, what I like to see is if I have divergence as well. That also makes the trade a lot easier to want to take in those areas. So we've got support here. Stochastic gets above 20, and you could buy it right above this bar right here. And it triggers, and of course it goes. Nothing to do here on the downside, because as far as I'm concerned, it didn't hit and hold that resistance area for a few bars, so nothing for me to do there. Finds its way back down to support, and you can see it hits here, and then as I mentioned, this is a one touch. It one touches, and I don't like those, so I wait for a few touches, because what can often happen is it hits once and then it bounces off that area and then it comes back down to retrace to that area. So that's when I'm interested, is when it's holding for a few bars here. And we actually got in above this blue line here that I've got going on here, and we don't have divergence to the upside there yet, but you'll notice that it comes back down and retraces, never stops us out, comes back down, and retraces back to support. And now you can see that we've got a lower low here than here, and on the stochastic we've got a higher low here than here. So that would lead us to believe that we have divergence to the upside. So a nice place to take it if you hadn't already taken it here. And of course we had to sweat this out and hope our stop didn't get hit. But if you see something like this, you can always take it when you see the divergence. And as soon as the divergence materializes, then you can get in above one of the bars here. This actually was an amigo that didn't trigger. So let me just go ahead and erase that line. And that was for a short that didn't trigger. So then you would be looking to get in somewhere like right around there, above that bar, and then it finds its way up to resistance. And then here it hits resistance. It holds there for a few bars, and you'll notice that waiting for the stochastic to get below 80 here, that's what I want. I want it to go below 80 or above 20 and you just want to do that when you're in a range. Don't try to do that when price is moving in a direction, because it's not going to work. But right here you can see it hits the resistance area, holds for a few bars, and the stochastic gets below 80, and it would have you getting in right under this bar there. So you put your sell stop in and it never triggers. So once price bounces and is heading higher again, you just cancel your order. Now I like it even better, because now it retraces back up to the resistance area, and now I've got divergence to the downside. You can see here in price I've got higher highs here than here, and on the stochastic I've got lower high here than here. So that would lead me to believe that I'm due at least for a few bar retracement. So this is the bar that actually gets my stochastic under 80. Even though it looks like it's the bar before, it's actually this bar I've got marked. And as this bar is forming, once I get my stochastic to cross below 80, I can put a sell stop under this bar. And what will happen is if the stochastic winds up going back above 80, the price bar will actually move higher, and it will never trigger your order. So you get in under this bar here, and then it finds its way not quite to support. So here, because it didn't find its way down to support, I'm not interested in trying to do a range trade buy, because the idea is that I want to be in the area of support and resistance that continually holds. So nothing for me to do here to buy it. Never finds its way up to resistance, so there's not another range trade to take short here. Now here's what I want to show you how the stochastic can be helpful in doing these range trades. So here you can see that price finds its way down to support again, and this was an amigo that didn't trigger. So let me just go ahead and erase that so you can see. Here we go. So price retraces back down to the support area, and so you might be sitting there thinking, okay, I'm going to take a buy, I'm going to take a buy, but the stochastic never gets above 20 here for you to buy it. So if it's at support, I want the stochastic to cross above 20, and I'll get in above the bar that's giving me that. If I'm at resistance, I want the stochastic to cross below 80, and I'll get in under the bar that's giving me that. So the beauty of using the stochastic to time it is that it will keep you out of trouble a lot of the time at those support areas, instead of just putting a buy stop down in this area here, anticipating it hitting, and then you're just going to get in, or a limit order or whatever you'd like to use, and then you're in just because it's at support, and then it decides to break down. And that's the thing about range trades, is that they work until price decides to break out or break down, because we know it's inevitable at some point the range is going to break in one direction or the other. So by using the stochastic, you can see here it never crossed above 20, so you would never be trying to place your order here. So you'll find that really helpful in doing range trades. And no matter what instrument you're going to trade it on, you'll do it the same exact way. The key is to make sure you've got a repeated area of support and resistance that you can count on, and again, using the stochastic to time it will keep you out of trouble a high percentage of the time. So I hope that helps, and if you want more information, you can go to my site, www.easyemintrade.com. Take care, you guys.